Welcome back to the PNJ Group series on the FASB Conceptual Framework. In the first section, we learned that financial reporting exists to give capital providers useful information, but that raises an obvious follow-up. What actually makes information useful? In this section, we unpack the qualities that turn raw numbers into something a decision maker can trust and act on. Get these right, and the rest of accounting has a purpose. Let's dig in. By the end of this section, you will be able to explain the two-tier hierarchy of qualitative characteristics. You will define relevance and faithful representation, the two fundamentals, and break each into its parts. You will apply materiality, one of the most judgment-heavy ideas in all of accounting, and you will identify the four enhancing characteristics that sharpen useful information, along with the cost constraint that limits how far we go. Let's start with the structure. Here's the key thing. These characteristics are not a flat checklist. SFAC 8 Chapter 3 arranges them in two tiers. The fundamental characteristics, relevance and faithful representation, are what make information useful in the first place. The enhancing characteristics improve information that is already useful. The order matters. No amount of polish, comparability, or timeliness can save information that is irrelevant or unfaithful. So we always satisfy the fundamentals first, then layer the enhancers on top. Let's take the fundamentals one at a time. Information is relevant if it is capable of making a difference to a user's decision. Notice the word capable. The user does not actually have to change their mind. The information just has to have the potential to matter. Relevance has two ingredients. Predictive value helps users form expectations about the future, like using past results to forecast cash flows. Confirmatory value helps them check whether earlier expectations were right. Most figures do both at once. Actual third quarter revenue confirms last quarter's forecast and feeds the next one. Materiality is relevance made specific to one entity. Information is material if omitting or misstating it could influence a user's decision. Watch out for this one. There is no universal threshold. The SEC and PCAOB have historically used a 5% of pre-tax income presumption, but U.S. GAAP treats materiality as both qualitative and quantitative. A small dollar error can still be material if it hides a trend, masks a loss, or was made on purpose. Cumulative misstatements matter too. Because judgment is required, discuss any immateriality conclusion with your manager before relying on it. The second fundamental is faithful representation. Information must depict the real economic phenomenon, and that takes three things at the same time. Complete means including everything a user needs to understand the item, so a liability footnote that drops key terms fails. Neutral means no bias, bad news reported as readily as good. Free from error means no mistakes in the description and that the process was applied correctly. Here's the subtle part. Estimates can still be faithful if they are clearly labeled as estimates with the uncertainty disclosed. Faithful does not mean perfectly precise. In 2018, the FASB brought back a word with a complicated history, prudence. The worry was that prudence means being conservative, and conservatism is a bias, which would clash with neutrality. So the framework drew a careful line. Prudence here means caution under uncertainty, and only asymmetric prudence is acceptable, applying greater care to recognizing gains than losses. What is not acceptable is deliberately understating assets or income to build hidden reserves. That is bias dressed up as caution, and it violates neutrality. Prudence guards against overoptimism, not against the truth. Now the enhancing characteristics, starting with 2. Comparability lets users spot real similarities and differences across periods and across companies. It depends on consistent methods, which is why changing an accounting policy is such a big deal. Verifiability means different knowledgeable observers could reach consensus that a depiction is faithful. It comes in two forms. Direct verification is counting the inventory yourself. Indirect verification is checking the inputs and recalculating the result. Together, these two qualities are what let an investor compare your client to a rival and trust both sets of numbers. The other two enhancers deal with delivery and clarity. Timeliness means getting information to users while it can still influence a decision. Stale data is less useful, though sometimes old information is all there is. Understandability means a user with reasonable business knowledge, reviewing the information diligently, can comprehend it. Here's the important guardrail. Complexity is never a reason to leave information out. If a transaction is genuinely complicated, you explain it clearly, you do not hide it. Dumbing down the statements would fail the very users they exist to serve. There is one limit hovering over everything: the cost constraint. Producing information is not free. Costs include collecting and processing data, verification, dissemination, litigation risk, and even competitive disadvantage from revealing too much. So the benefit of any required information must justify its cost. This is why disclosure requirements have boundaries rather than demanding infinite detail. But be careful. The constraint limits what is required. It does not excuse omitting information when the benefits clearly exceed the costs. When in doubt, the user's needs win. Let's pull it together. Useful information rests on two fundamentals: relevance and faithful representation, and each has its own parts. The four enhancing characteristics, comparability, verifiability, timeliness, and understandability, improve information but can never rescue data that fails the fundamentals. Materiality is relevance applied to your specific entity, and it always demands judgment, never a single percentage. And the cost constraint sets a sensible boundary on what we require. Next, we turn to the actual building blocks of the statements, the elements. Thank you for completing this section on qualitative characteristics.